Hi there everyone, good morning and welcome to Market Fatafat. This is the show where we get you a crisp and comprehensive view of all the stuff to watch out for in trade. We'll try and squeeze in 30 over the next half hour. I'm Avan Dabash. Let's get straight to it. Well, joining in today we have Dr. C.K. Narayan, Vinay Rajni, a technical analyst at HDFC Securities, as well as my colleagues Pranay and Jayesh joining in. Well, let's get started then with the first stock, and that's the largest PSU bank. Let's talk about the latest news and why it's in focus, Pranay.
Well, two updates here, Avan. One is that the resolution plan on Jet is still underway. They couldn't come up with a final one actually. There has been some to and fro between Etihad and the lenders, and therefore it will take some more time. But nevertheless, it's going to be a comprehensive one for long-term viability of Jet. So that is one update. The second one is on SR, and it's not really looking to wait. It's put loans worth about 15,400 crore on block and has kept a minimum reserve price of about 9,500 crores. So that's the update on Jet, on SBI.
The take coming in on SBI, so two pegs, and the stock is quoting at 301. Meantime, Jet Airways continues to remain a newsmaker. Just take us through what exactly the lenders are saying, what culminated out of yesterday's meet, and Etihad's conditions, which remain very firm, Jayesh.
Our stock has been under pressure. We saw that yesterday, about 8% fall, and today morning also we have seen a near 4% fall in the stock. Now we spoke with the management of SBI. In that conversation we understand that the lenders are in fact considering a rejig plan, and what they're actually aiming towards is finding a resolution, and also which will suit the long-term viability of the entire structure of the deal as well. But there's still some unclear terms that we are awaiting details on, but the stock continues to be under pressure.
All right, that's the take coming in on Jet Airways. Yes, continues to be under pressure. Options few and far between. We'll have to see what happens. 258 on last count. Meantime, Vinay, let's talk about REC. That's the stock that's buzzing away from the broader end of the market. Do you think that it's a good play to bet on at the current juncture?
Yeah, good morning. Thanks for having me on the show. REC looks strong on the charts. From the December bottom, it has already risen 30%. Now it is trading at 129. On 10th December, it made a low around 99. So after 30% rise, it has. But overall, in the short run, I think running correction is due. So on dips, you can accumulate. I see a strong support around 123. So let it come down. You can buy, accumulate on dips. So you should wait at this point of time. If it corrects towards 123 to 124, so overall it's positive.
Because we don't have the greatest audio, Vinay is saying that it's advising one to accumulate the stock on dips. It's broken out of a 9-month consolidation, so wait for a bit of a dip to enter. Meantime, let's talk about Brigade Enterprises. Dr. C.K. Narayan joins in with his technical opinion. Stock that's building onto its gains in trade today. Where exactly are you placing your targets and stop losses, Dr. Narayan? Okay, we don't have him with us at the moment. Let's move on to the next one. And that is IT stocks that are in focus today, largely on the back of the brokerage note that's come in earlier today. And this one is a note that has come out by JP Morgan. They see a sequential slowdown for the IT sector this year. In fact, despite the confidence shown by TCS and Infosys, they do see a challenging demand, and they believe that only tier 1 stocks will see a comfortable double-digit return. So in light of that, Infosys is on the radar. Tech Mahindra, the only two stocks that they're overweight on. In fact, they've downgraded Hexaware to neutral with a target price at 400 rupees. And they are also overweight on Emphasis and Mindtree, but that's attributed to the low PE. That's the take coming in on the overall IT space, stocks that they like. Meantime, Axis Bank as well is on the brokerage radar. Pranay, what does CLSA have to say?
Well, Axis is one of its high conviction picks in the financial space. In fact, it has rolled forward the target price to about 800 because it believes that not only has it given a long-term breakout from its consolidation, which was being seen, from the period of 2015. But secondly, with the new CEO, there is a lot of optimism. A new team is being prepared. While we are seeing some management churn, they believe that it's a long-term positive. And right now, it's in a sweet spot as it exits the NPL recognition cycle. So you should see a boost in its profitability.
High target price at 800. Meantime, Jayesh, let's talk about Reliance Industries. That's clearly going to be the focal point today. What are we expecting in terms of the internals from the numbers by and large?
So Avan, we're looking at sales degrowth of about 17% at 1.3 lakh crores. Also, if you have a look at the operational performance, that is likely to come in flat for Reliance Industries. EBITDA is likely to come in at about 21,000 odd crores. But the most important number that the street watches out for when it comes to Reliance Industries is the GRM number, which we are expecting a sharp fall of about 16% at $8 per barrel as compared to $9.5 per barrel. Also, the other focus point that the analysts will actually watch out for will be the ARPU number from Jio, which is likely to dip as much as 3% at about 128 rupees versus the 132 that they reported earlier. But if you have a look at the stock performance, it's mixed because it's holding on to gains of about 0.5% but has given up gains from the morning session.
All right. That's 1143 on RIL. GRMs closely being monitored. They're seeing falling to multi-quarter lows, but retail and Jio are expected to be the game changers. We'll only find out later this evening what the company delivered. Meantime, let's focus in on Lemon Tree Hotels. Despite the market volatility, Vinay, this one has managed to hold its own ground. What exactly is your analysis on the charts on Lemon Tree?
Yeah, Lemon Tree is not having that much history to give a broader view, but yes, hotel industry overall, Indian hotel, East India hotel looks better on the charts. So overall sector wise, I am bullish on this particular sector, and Lemon Tree is having a strong support around. It can continue to hold on to long position, though it is not a clear cut trend, but you can continue long position with a stop loss of 68 and bias is towards upside only, and I see a short term resistance around 76. Positive, continue to hold with a stop loss of 68, and on the upside you can.
It's a view that there's a strong base at 65, a positive bias. But if one had to pick, he's more bullish on EIH and Indian hotels within the hospitality space. Meantime, let's pull up ONGC as well, and it's a report that's come out by CLSA. It's largely on the India strategy, but when it comes to the PSU space, they're talking about how PSUs are trading close to all-time lows, and a lot of bad news now does seem to be priced in. But when they're picking out their top PSU plays, it's ONGC, NTPC, Coal India, as well as SBI that feature at top of the heap. Let's move on then. And if we have Dr. C.K. Narayan talk about Sobha developers as well. Above the 200 DMA, Dr. Narayan, where do you see this one headed?
Well, I think in the case of Sobha, you have a range breakout which is in progress right now. If you look at the charts, you will find that stock has been consolidating for multiple weeks and currently challenging the top end of the range as it were. Now we are awaiting some amount of momentum improvement which shall enable this range breakout to succeed. I think a little bit more of price action the way it is being seen today will certainly bring in such a improvement in momentum. If both these things happen, I think we could see Sobha continue towards about 520, 525. So it seems all set to be a breakout buy.
There you have it, all set to be a breakout buy, 486 on the stock. Moving right on, then Pranay, let's also talk a little bit about Maruti. What's happening after the December auto sales numbers? What's the latest in terms of the new plans?
Well, they're hoping that with new launches, the volume growth picks up. The first one which is going to be a Maruti Wagon-R, the new edition. But they also have a few more which are lined up. So that is one that should revive the volume growth numbers. Secondly, they are looking at expansion. So 13 to 14,000 crore investment plans are being drawn up over the next couple of years. And we could see finalization of another plant in the South India. So these are the updates on Maruti Suzuki.
All right, we'll have to see if they do actually work out for them. But lots of expansion plans on the cards, 73.69 on the stock. Well, from auto then to IT at number 12, it's Mindtree, which is the cynosure of all eyes, given the fact that it's been a pretty strong set of numbers. Walk us through the details, Jayesh. How have they performed?
Avan, Mindtree clearly has been a ranked outperformer today. Also, if you look at the stock, it's up about 3% at the day's high. Also, it's the top gainer on the Nifty IT index, and that is primarily because they posted a good set of results, constant currency revenue that was up about 2%, and also there was significant margin expansion at about 15.9%. What we also understood from the management was that they have guided that Q4 revenue growth will be similar to Q3. So that's some of the factors that the market is actually taking heart from, and that's the reason we're seeing the uptick in the stock.
All right, that's the word coming in on Mindtree, which is holding out quite firmly in trade. But as we focus in on taking a quick break, let's just hear out a word from the finance minister on the RBI debate and what he had to say regarding the same. He believes that the government in the recent months has strongly felt that certain sectors of the economy need credit and liquidity support. Squeezing out both would eventually hurt the sector and hurt the group. Market Fatafat right here on ET now. Let's keep the countdown going then. And Dr. Narayan, it clearly seems that number 13 is unlucky for Dish TV because relentless selling pressure has been kicking into the stock. What's going on and where does it abate?
Well, I think as far as Dish TV is concerned, it has been, somewhat beset with a lot of problems, and as far as its trend is concerned, and there has only been a relentless pressure which really doesn't want or look like easing up, and the stock has actually broken down below its former swing lows, which it had, where it looked like it was consolidating around this 40 level, 38 to 40, but now it has broken down below that also, so it really doesn't hold out much of a hope for Dish TV, and I think one should definitely avoid bottom fishing in this stock, and if one is holding the stock, any rally that you may get in the near future should also be used to exit from this position. Stock is definitely in the clutch of bears here.
Yes, it sure is. Yes, a lot of fundamental problems as well, which seem to be putting pressure. Meantime, Edelweiss is another stock that's in news today, and that's largely on the back of the fact that it's launching a $1.3 billion distress fund, which would be India's largest fund mobilization for buying distressed assets. It's obtained commitments from large pension fund insurers like CDPQ and Alliance, according to sources. And the two funds are likely to invest nearly $400 and $200 million respectively. Besides that, we think that Edelweiss is expected to put in nearly $200 million. This could also see interest coming in from sovereign funds in the Middle East and Singapore, as well as North America and Europe. So that's the latest on Edelweiss, according to reports, 2% down in trade. Meantime, Yes Bank as well, it continues to remain a newsmaker, but what's going on the chart? Vinay, give us some details. After that massive rally that we saw, looks like that's being put, the brakes have been put on that. But does the stock go sub 200 soon?
Yes, stock has risen more than 10% this week, and today it is corrected by 2.5%. But it seems that it is resuming its uptrend. I think overall 194 is a strong support. So one can continue to hold on the long position with a stop loss of 194. The upside resistance is seen around.
And there don't have the best audio. What we were able to decipher is that there's strong support at 194, target 230. Maybe if we could just get that audio sorted, we would be able to hear it out from Vinay. But moving on then, Jayesh, let's talk about another set of results, and that is Motilal Oswal. The stock is languishing under pressure. What were the numbers like? Quite disappointing.
Dismal quarter as far as Motilal Oswal, financial services is concerned. Stock is down about 5% and is the top loser on the Nifty 500 as well. Revenue was down about 20% at nearly 650 crores, and the profit after tax was down about 90% at about 35 odd crores, and hence the pressure on the stock.
All right, that's important to note. It's not been the best set of numbers. The volumes are highest in the last 3 weeks. It's one of the top drags in trade today. Profits have slumped 86%. Meantime, JSPL as well is on the brokerage view.